Hi, Tamal. Welcome to the Banking Show. Last time, towards the end of our discussion, we talked about the SVB bank collapse and the lessons from the incident. But ever since, we have seen more banks have gotten into trouble. There have been more rescue acts, whether it is the Credit Suisse being taken over by by the UBS, or the Signature Bank collapse. Do you still think we have no reason to worry? How concerned are you?
No, I'm not concerned at all. I'm sticking my neck out. The reasons for which all these collapses in the Rescue Act, the three names that you have given, very different from the Indian context. Look at SVB. It was a bank for the techies, the tech startups. And the problem, of course, did not emanate from the tech startups. It actually problem was the asset liability mismatch in terms of interest rate, not in terms of tenure mismatch. What happened? It was flooded with money, and that money they did invest in US bonds, and then as the interest rate rose, the bond yield also rose, and then eaten away the value of the bonds. And when this tech guys, the investors were not pretty excited about putting in more money. They wanted to withdraw their deposits, and then SVB had to sell the bonds and book losses. And that's the problem. So one thing led to another, and then there was a run on the bank. Signature Bank, again, is a bank primarily for the law firms, and it's a very different kind of story. It got into trouble, law firm and the real estate firm, and it got into trouble because it allowed cryptocurrencies, crypto assets in the form of deposits. And then the last case you spoke about, UBS taking over Credit Suisse. Credit Suisse was a sort of, I would say, is a cocktail of scandals. Multiple scandals were there. New CEO came, and he had to leave. Another CEO came, and his plan was not approved by the investors. Large investors could not put in more money because there was restrictions from the regulations, and different kind of scandals altogether. And it's historically, it had posted the highest ever loss ever since the Lehman crisis. So you see, the character of all these three beasts are very different from the Indian banks. So I would still say that we have nothing to be worried about what's happening in the rest of the world. As far as banking system is concerned, our system is fairly resilient. Our financial sector stability is something which we should not lose sleep over it at this point of time.
Are there any pockets in India that we have to watch? Because in your column also, you've talked about cracks appearing in the mortgages and loans for the MSME sector, for instance.
Yes, there is no reason for complacency. There are a little bird tells me that some banks are seeing certain problems in unsecured loan, mortgages, and MSME segment. Why is this? Because primarily the reason is the same, the hike in interest rate. Of course, if you look at the hike in interest rate in US is far higher than in India. India, the policy rate has gone up from 4% last May to 6.5% as we speak. Now, all the loans are linked, part of the loans are linked to external benchmark, which is RBI's policy rate or 364-day treasury bill rate, which means they have all gone up by 250 basis points. So imagine you picked up a home loan at 6.5% or close to 7%. Now you need to pay 9% plus, right? 250 basis point loans have gone up. All the MSME loans are linked to this external benchmark. And the rest of the loan, which is probably 60% of the loans, are linked to the so-called MCLR, or the marginal cost based lending, where also the loan rates have gone up. Now, as a result of that, there are certain segments, they will be in trouble. They will not be able to pay back the loan. Because what's the choice as a borrower? You can, of course, stretch the tenure, but to what extent you can stretch depending on your age, on your retirement age, and so many other things. There have been reports that home loan can be stretched up to 50 years, the way it has gone up. And you keep on probably servicing only the interest, not the principal. Now, this is the kind of situation. So why did we reach that situation? Of course, one is the interest rate hike. So that's the thing. And second is the risk mispricing by certain banks.
How do you suppose the regulator, the RBI, and the banks are going to react to this?
As far as banks are concerned, they need to retrospect. There needs to be soul searching. Am I capable of doing everything? Am I capable of doing giving every loan, every kind of loan, or should I put in place the right kind of risk management mechanism in place first, and then we'll get into it. So this is a big learning for the banks. I think some of the banks need to take a hard look at the composition of their balance sheet and their credit portfolio. As far as Reserve Bank of India concerned, I have a feeling there will be pressure mounting on RBI to go slow on interest rate hike.
Thank you so much, Tamal. I mean, some very important points you've made there, that it's soul-searching time for the banks. We cannot be complacent. Thank you so much for your insights, and look forward to our next chat. Thank you.
Thank you.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that lets success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.